Assalamualaikum. My name is Halal M. Imran. My nomenclature is F1108.
Hello, my name is Muhammad Salahuddin bin Salim and my matrix number is 23 DLS 23 F1111.
Assalamualaikum. My name is Muhammad Isra. My matric numbers 23 DLS 23 F1092.
Hi, my name is Izzat Irfan bin Zulkifli and my nomenclature is 23 DLS 23 F1089.
Hi and Assalamualaikum everyone. My name is Nur Dani Shabela binti Zulakimi. My matrix number is 23 DLS 23 F1083.
So, in the first part, I will talk about the introduction to accounting. So, what is the importance of accounting? The importance of accounting within business comes from its ability to keep track of an organization's financial health and reliability. Without an accountant, business owner will not be able to analyze their financial health or know whether their business is profitable.
So, in account, we have a 6-element content in definition of accounting. So, do you guys want to know? Let's check it out.
This is the 6 elements of accounting. The first one, we have a recording, classifying, summarizing, reporting, analyzing, and interpreting. The first one is the recording. Transactions are recorded in journals, sketchbook, and ledgers based on information from sources of documents. For the example, business documents are receipt, invoice, and cash bills. Second, classifying. Accounting data from a business documents are arranged and categorized such as assets, liabilities, revenue, expenses, sales return, purchase returns, drawings, and capital. 3. Summarizing. Accounting data for a particular period in the form of financial statement, statement of comprehensive income, and statement of financial position. 4. Reporting. Financial statement SOCI and SOFP will be presented to the owner of company and user of financial information. 5. Analyzing. Analyzing financial data involves examining the information presented in financial statement to gain insight into a company performance and financial health. And the last one is interpreting. Interpreting involves drawing conclusion and making decision based on the analysis of financial data. This step helps stakeholders understand the implication of financial information and make informed choice regarding investment, loans, and business operation. So for the last one, let we see difference between accounting and bookkeeping. For accounting, needs to review financial statement and account balance, preparing and adjusting entries, perform financial analysis and financial planning, review or audit balance, strategic planning, create financial forecasts. For bookkeeping, need to record and categorize financial statements, create customer invoice and collecting payments, process payroll and remit payroll deduction, conduct bank or credit card account reconciliation, generate monthly financial statement, and maintain general ledger and chart of account.
Hi, Assalamualaikum. So before I start, let me introduce myself first. My name is Izzat Irfan bin Zulkifli and my nomenclature is 23 DLS 23 F1089. I would like to tell you guys about the uses of accounting information. Uses are divided into two. Only two, which is internal uses and external uses. I will explain about the internal uses first. So you guys can see in the slide, internal uses is the consist of owner and all the people appointed by the company. It means internal uses are people within a business organization who use financial information. So you guys can see in my slide the example owners, managers, and employees. I will explain the detail about the example of internal users. The first one is owners. The task of owners is want to know whether their funds are being properly used or not, know the profitability and the financial position. So the positioning of owners is in the top position, in the higher position. And owners also have authority to make a decision because owners is who create the company. The second is managers. The task of managers is it helps a manager in appraising the performance of the subordinates. Another meaning of subordinate is member of staff. So managers is who needs to guide a member of staff or team to maintain the company performance. The third one is employees. The task of employees is get the actual information about the financial of position their organization with the help of financial statements prepared by the accountant. So another meaning employees is, like I say already, member of staff or worker, and the positioning of employees below than manager. I will continue with the external users. External users is the consist of all the people from outside of the company. So it means external users are people outside the business organization who use accounting information. It different with the internal users who use financial information. And you guys can see the example of the external users are customer, tax authorities, and the competitor. Let me continue about the detail of the external users. The first one is customer. The task of customer is to assess the financial position of its suppliers, which is necessary for them to maintain a stable sources of supply in the long term. So customers is who buying and consuming a product or services. The second one is tax authorities. The tax of authorities is to determine the credibility of the tax returns filed on behalf of the company. So tax authorities are government agency who manage various of the type of taxes, which is such as sales tax and income tax. And the last one is competitor. The task of competitor is to assess how far a business can handle in competition and at what level. So the competitor is the business or organization who operate the same product or services.
Hi, Assalamualaikum everyone. So today I'm gonna presenting to all of you about the accounting process and goals of account in chapter 3. So what we have in the chapter 3, as you guys can see in this page, we have accounting cycle, which is the first one. We have source of document, journal, ledger, trial balance, adjustment, adjusted trial balance, financial statement, and the last one is financial report. The accounting process. What is meant by the accounting process? A step-by-step accounting process that begins with the recording of business transaction, posting to journal and ledger, and is end with the preparations of the company's financial statement. So what we have in this page? In this page, we have purchase order. What is meant by the purchase order? The accounting such document issued by a buyer to the seller, setting out details of the goods or service the buyer is ordering from the supplier. So next, we have delivery order. Delivery order is sometimes offered to as good dispatch note or accounting such document prepared by the seller to show that goods have been delivered to the buyer. The delivery note normally show particular of the good delivery, the parties to the transaction, the date and the quantity of product delivered. The original delivery note is sent to the buyer, and a copy of the delivery note is retained by the seller to support the double entry bookkeeping transaction. So, what is invoice? Invoice is when a seller sells a goods on account to a buyer it issue an invoice. The typical show particular of the goods or service sold, including the parties, term of payment, the date, quantity, and price. Fourth, we have credit note. Credit note used to inform the buyer that his or her account has been credited with the state amount, also known as credit memo. It is issued in curious situation to correct a mistake such as an invoice amount is overstated, correct discount rate is not applied. So next, we have payment voucher. A payment voucher is an authorizing document for a payment. The voucher can be for any form of payment such as paying cash as expenses, wages and salary, or a payment on vendor account in the account payable ledger.
So
In my part in source of document is cash bill. The first point is in cash transaction only. The second point is issue by the seller. The third point is cash bill serve as proof of a transaction that has taken place between two parties, and it contains all the necessary information about the transaction, such as the amount paid, the date of the transaction, and the items purchased. So as you can see, this the example ledgers of the cash bill. This is a sample cash bill. So the second type of source document is official receipt. The first point is writing acknowledgement which grant legal validation to a repayment of all or a part of a debit. The second point is issued by the receiver of the payment to the payer. The third point is issued by the seller to the buyers as writing evidence on sales of service or leasing of properties, as well as acknowledgement on collection of cash payment on service rendered in service as basis of the percentage tax liability of the seller. You can see the example of the ledgers of official receipt and official receipt example official receipt.
The third type of document is debit note. Debit note used by seller to inform the buyer his or her account has been debited with certain amount as stated in the debit note. This document used when the sales price is understated. Debit note used by a seller to buy and to notify them of current debt obligation. This is the example of debit note ledger. So the fourth is memo. Memo use a notice when there is an increase in capital, drawing, or other extraordinary event. As a reminder, document transaction occurring between business owner with business. Memo used by a seller to buyer to notify them of current debt obligation. So this is the example of ledger memo. Okay, so the last one is check bud. So check is written order to bank authorizing the bank to pay an amount of money to the person named on the check. Evidence that payment has been made by check. Check bud the part of the checkbook where you will record what the check was for. So this is example for check bud. So that's all from me.